Ethereum in 2025, unveiling the investment potential of the digital oil. Ethereum isn't just a blockchain, it's the digital oil fueling Web3. In 2025, the demand for smart contracts, NFTs, DeFi, and Layer 2s has never been higher. But does Ethereum still deserve to lead? Before we dive in, a quick disclaimer: crypto assets are high risk. You could lose all the money you invest. There is no consumer protection. This content is not financial advice, always do your own research before investing. Purpose of this video today: we explore Ethereum's 2025 potential, from tech upgrades and adoption to price and long-term investment strategy. By the end, you will understand why ETH still matters, or whether the competition has caught up. Price and market cap today. As of mid-2025, Ethereum trades between $3,000 and $3,800 with a market cap over $450 billion. But beyond price, its strength lies in usage, staking, and being the foundation of the Web3 stack. Proof of stake and roadmap. Ethereum's transition from proof of work to proof of stake slashed energy use and introduced staking. The roadmap continues through upgrades like the Surge, dank sharding, the Verge, Verkle trees, and the Purge, data cleanup. Layer 2 boom. Arbitrum, Optimism, Base, and zkSync are scaling Ethereum. Billions in TVL now sit across L2s. All transactions eventually settle back to Ethereum, increasing demand for ETH and burning supply. Liquid staking explosion. With 28 ETH staked, 23% of supply, platforms like Lido and Rocket Pool dominate. Liquid staking tokens like Stith and Reth allow users to earn while staying liquid, creating new layers of yield farming. The digital oil analogy: ETH is consumed like fuel to process every smart contract, from NFTs to DeFi. It's not just held. It's used, burned, and integrated across every part of Web3, making it functionally digital oil. ETH burn and deflation. Since EIP 1559, ETH is burned with every transaction. Over 4 million ETH has been destroyed. In high usage periods, Ethereum is deflationary. With less ETH in circulation, scarcity increases value. ETH as collateral in DeFi. ETH is the primary collateral. It backs DAI, is deposited in Aave and Compound, and anchors liquidity pools on Uniswap. ETH isn't just fuel, it's the reserve asset of Web3. ETH as a yield-bearing asset. ETH earns passive income via staking and restaking. EigenLayer allows stakers to secure additional services for more rewards. ETH holders now benefit from real, on-chain financial productivity. Ethereum as a settlement layer. Ethereum is now the base layer for thousands of apps. L2s process the scale. Ethereum confirms the truth. It's the final settlement system for all of Web3's economic activity. Tokenization of real-world assets, RWAs. Institutions like BlackRock and Franklin Templeton issue tokenized US Treasuries on Ethereum. RWAs, from real estate to carbon credits, are being digitized, traded, and settled on Ethereum rails. The rise of EigenLayer allows ETH to be restaked and reused to secure other protocols, creating a modular security model. This amplifies ETH's role in the ecosystem and its demand as a productive asset. Stablecoins and Ethereum. USDC and USDT largely live on Ethereum and its L2s. They power payroll, remittances, payments, and more. Ethereum is the plumbing behind crypto's most used tools. CBDCs and governments on Ethereum. CBDC experiments in Hong Kong, Brazil, and the EU often rely on Ethereum-compatible rails. Chainlink TIP helps bridge private and public chains, making Ethereum a key part of sovereign systems. Enterprise adoption. From Microsoft and Accenture to JPMorgan and Visa, companies are building on Ethereum or integrating with it. Supply chains, compliance tools, identity. Ethereum is more than finance. The competitor landscape. Solana, Sui, Avalanche, Aptos, fast and cheap chains are rising. But Ethereum prioritizes security and decentralization. The battle is between speed and trust. Ethereum's roll-up-centric strategy rather than scale L1, Ethereum's strategy is to empower roll-ups. With EIP 4844 and dank sharding, L2s become faster and cheaper. Ethereum becomes the scalable internet backbone of crypto. Ethereum's economic flywheel ETH is deflationary. ETH is staked. ETH is used. ETH is burned. Unlike inflationary L1s that dilute, Ethereum's flywheel increases value through usage, security, and yield. Risks: staking centralization. Lido controls 30% of staked ETH. Centralization in staking threatens neutrality. DVT and decentralization of validators are crucial to mitigate this long-term risk. Risks: regulation. Is ETH a security? The US hasn't clarified. Staking might trigger securities laws. Uncertainty clouds ETF approvals and institutional inflows. Risks: L2 UX and fragmentation. With dozens of L2s, users face confusion, fragmented liquidity, and bridge risks. Until L2s become seamless, Ethereum may struggle with mass adoption. ETH price forecast scenarios. Conservative, $6,000 ETH to $720 billion market cap. Base case, $10,000 ETH to $1.2 trillion market cap. Bullish, $16,000 ETH to $20,000 ETH, up to $2.3 trillion cap. Catalysts: ETF approvals, restaking, institutional flows, RWAs, and ETH burns. ETH investment thesis summary. ETH powers everything. It generates yield. It's deflationary. It has institutional trust. It's secure and battle-tested. In short, ETH is still crypto's ultimate blue chip. Final thoughts and strategy. ETH isn't a meme coin, it's a core holding for long-term investors. Use dollar cost averaging, staking, and leverage DeFi responsibly. ETH is volatile, but it's not going away. Smash like, subscribe, and comment with your ETH 2025 prediction.